Hey guys, welcome back to another Weekend Trading Edge video. As I usually do, we're going to start off this week's video with a little bit of a trading lesson, and then we're going to dig into the charts as I show you the top trading ideas that are on my radar for the week ahead. Now, for you guys that have been watching this show for years and years and years, you know I don't ask for much. Aside from taking a few seconds to hit that like button, leave me a comment if you like what you see or if you have any questions. And of course, share this with your trading community so that we can spread the word and continue to help more and more traders out there. Now, this week, Jason Greystone and myself, we did a pretty cool Trader Coffee Break episode on growing as a trader. Not just growing as a trader, but how your growth as a person affects your growth as a trader, your growth as a trader affects your growth as a person. And it was just a really good discussion on how those things kind of intertwine. And I got one of the comments I got was this. He said, Akil, the changes in my personality, or excuse me, not my personality. He says, the changes in personality is ridiculous, in my opinion. The better at trading I got, the better I was at looking after myself. The more I started realizing about human behavior, I dove into who I was with breathing techniques, all stemming from wanting to be a better trader. I realized that I had to be a better person. Rarely do you see someone successful whose life is in the mess, laugh out loud. And it's an interesting comment because the guy kind of contradicted himself. He says that he thinks the personality changes are ridiculous and then talks about steps he basically took to change himself, which I would classify under personality changes, but it doesn't matter. Anyway, I agree, especially with the last part where he says, rarely do you see someone successful whose life is a mess. And I think this is a really underrated part of the trading journey and an underrated part at why most traders fail. And I want to dig into a little bit deeper into this topic and give you guys some solutions as well. But in general, a lot of traders look to become traders for the wrong reasons, right? They don't look to become traders for, long-term financial wealth creation, wealth building, or adding it as a component that can help their money work for them and increase the speed in which they accumulate wealth. Many traders look at it as kind of the solution, right? The get rich quick scheme, right? Their life is in shambles. They need a quick fix to get from point A to point Z, and trading is that. And because of that, they don't take the time to really approach trading the way it really needs to be approached if you want to be successful, right? We always talk about trading being like a business, and I mentioned this in previous episodes. Look at the stats of businesses out there. Look at the stats of how many startups fail within the first few months, fail within the first few years, fail within the first 5 years. You're going to be astonished by, how many startups fail. And many of the reasons that those startups fail is because the right preparation isn't being taken. And that's the same thing in trading. I've been working with traders for almost 15 years now. I think 13 years, 12 years I've been coaching. And we've also spoken to many established traders across the industry, prop firm owners and whatnot. And we've all kind of said the same thing, right? In order to become a successful trader, it's usually about a 6 to 18 month process, 6 being at the short end, 18 being at the long end. Of course, depending on where you're at, how quickly you acquire information, your background, all, the strategy development, choosing a strategy. There's so many things that go into whether you're going to be closer to the 6 month side or the 18 month side. But the point is, you should be giving yourself that amount of time to learn the skill of trading, develop the skill of trading, do all of the background stuff that needs to be done, right? Strategy development, back testing, demo trading, giving yourself some time to be a rust buster, right? A rust buster is, kind of when you're rusty at something. Like think about a hobby that you haven't done in a long time. For me, I was playing basketball the other day where I haven't taken a lot of shots in a long time. So someone gave me the ball, I shot it and airballed it. It took me about 10 shots to kind of get back into the groove, kind of knock that rust off. The same thing happens with live trading. When you're trading with live money for the first time, you're new to the psychological effects that are now in your mind and pounding in your chest as it's time to execute your strategy. And you sort of do dumb stuff, right? FOMO, fear of missing out, you enter too early, you enter too late, you move stops back, take targets early, all the struggles that we always talk about. There's a process of kind of going through that rough period before finally getting it. That's why we say from 6 to 18 months. But the point is, you have to be patient. You have to be willing to dedicate that amount of time to be successful. However, if your life is a mess, you're not going to be able to, right? Think about Maslow's hierarchy of needs, right? You got the bottom needs, you got psychological needs, you got safety needs, you got social needs, right? If those needs aren't fulfilled, you're going to be in trouble because now you're desperate. And when you're desperate, right, it's that old caveman brain that comes in. When you're desperate, you don't think. You do dumb stuff out of the need to survive, right? I was talking to a buddy of mine the other day about kind of just the income gap that's happening, and pairing that with COVID and how mass chaos and anarchy is probably right around the corner. And we talked about what are people going to do when they have to survive. And I look at myself, and hopefully I'm never in that position. I don't ever see myself being in that position, but I'm someone who firmly believes that you don't hurt people, you don't steal from people. Those are pretty much the two principles I live by. But if things got bad enough in my situation and I ran out of options and I got to feed myself, I got to feed my family, I'm going to do what I have to do. My caveman brain's going to kick in. It's going to go into survival mode, and I'm just going to do whatever needs to be done. And at the time, you probably see it as a quick fix. Longer term, you're going to be in trouble. I'm going to get arrested or get murdered trying to do whatever I'm doing, and it doesn't help you out. But if you're someone whose financial situation is a mess, you're not thinking about being patient and learning how to trade and learning the fundamentals and testing a strategy. You're kind of in that desperation mode where you're like, I need something now. So you're falling victim to those people on the internet that are saying, hey, here's this get rich quick program or this simple trading strategy. Give me $19 and you'll make profit forever. Or even worse, you're falling victim to those scammers out there that are saying, hey, give me $1,000 and in 2 weeks I'll give you 10,000 back. It's just the way it works. Don't worry about it. You're not seeing clearly. You're blinded by this need to remove yourself from that situation, that you do dumb stuff, and then you ultimately fail, right? If on the other hand, if you have your financial situation in place, if you have your life situation in place, if you are in a comfortable enough position where there's not that life or death type urgency, there's still an urgency to do something different with your life. Maybe you're on the hamster wheel spinning, but it's not like you'll survive. You're comfortable, you're just not where you want to be. Now you can afford to give yourself time to do things the right way. And so this is what I recommend, right? Before you ever think about getting into trading, start thinking longer term. That's a bigger problem enough of us don't do. Start thinking longer term, right? So say that, hey, I don't want to be a successful trader by tomorrow. Say, I want to be a consistently profitable trader. What is this, August? I want to be a consistently profitable trader by January 2023. So you're giving yourself about 16 months, right? And then work backwards from there. So, okay, what do I have to do trading wise to achieve that goal, to be trading live by January 2023, for example? What do I have to do trading live or trading wise, right? I know I want to do 3 months of live trading, kind of rust busting. I know I want to do 3 months of demo trading. I know I want to do 3 to 6 months of strategy development and back testing, right? 3 months of learning how to trade. Or on the other side of things, right? Think about your financial situation or your life situation, right? The hierarchy of needs. I'm going to give myself a year while I'm doing this learning stuff to get my financial situation in place, get my friends and family, my social needs in place, put myself in a position where I'm comfortable enough with the other aspects of my life that I can afford myself the time to do this the right way and really progress through my training and my business development, essentially, the way that needs to be done. So give it some thought. Again, it's something that's not mentioned too much here in the trading industry, but your personal needs, that's important, because if your life is in shambles, if your life is a mess outside of trading, all of that is going to carry over into trading, and trust me, it's not going to end good. So let's hop into the charts. Okay, one thing you can be doing, and that's a good segue, is watching this video. Each and every week in this video, what are we doing? We are diving through charts. I'm taking you through opportunities. I'm really consistent with my approach, so you're seeing the same thing the same way each and every week, right? My live room members and tier 1 members will tell you the same thing. Akil is robotic. He doesn't do anything fancy to get views. He just comes in and analyzes the market the same way. So this is a part of your training. While you're getting your life in check, commit to this video, subscribe, hit that notification bell so you don't miss it, and watch each and every video and continue to learn while you're working on yourself on the back end. Also, if you guys are catching this kind of right when it comes out, we just did a 5-day free workshop. Watch it, right? The videos are going to be taken down this Sunday. So you only have maybe 48 hours left by the time you see this. It's about 13 hours of content. Watch it before it's gone if you're serious about trading. If you can't watch it all, get a screen recorder thing and put the playlist on in the background and record it. And that way you can watch it later at your leisure or rewatch it. I don't care, right? Get the information and start bettering yourself. That's what I want you to do. And if you're late to hearing about this, again, this is why you need to be subscribed and you need to have that bell hit. That way you don't miss this information, and that way I don't get angry emails saying, Akil, can you put it back up for another 4 days? I'm like, no, we've given you weeks of notice. So with that being said, let's hop into the charts. Let's get some repetitions in. Let's show you what's on my radar for the week to come. All right, so let's hit the charts. And before we get started, I want to give you guys a little bit of an update of how my trading has been going and what to look for in the week to come as far as on the fundamental side. My trading update will be pretty simple. I essentially haven't taken a trade for the better part of the last 2.5 weeks. Now, part of that was 2 weeks ago we did the Bridging the Gap workshop, so most of my focus was on presenting at the workshop. It wasn't too active in the markets. This week there just wasn't any opportunities that met my rules of engagement. Now, there was movement in the market. We did have the FOMC minutes come out. We saw some movement prior to that earlier in the week as well. With some risk off, risk on stuff, especially with kind of the New Zealand situation and them going into lockdown. But just because we saw a lot of movement, and this is important for new traders to understand, just because you see a lot of movement doesn't necessarily mean there are a lot of trading opportunities. I know your people you follow on the internet, they're going to share their highlight reel and, oh, I caught 100 pips today and 100 pips yesterday and all that fun stuff. But what's most important for a trader, a consistently profitable trader, is to wait for your move. And although we saw a lot of movement into some good locations, structurally speaking, none of them played out as far as what I needed to take them. So I sat on my hands. I'm having a good year. I'm in no rush to recklessly take a trade that doesn't meet my rules. So we'll wait for some good opportunities and hopefully we can get some this week. Now, I am expecting some similar type of movement this week. We have a heavy back end of the week as far as news goes, right? We have the Jackson Hole Symposium coming up on Thursday and Friday. We've got preliminary GDP coming out on Thursday for the dollar as well. We've got, I think, PCE coming out on Friday, and then our Fed Chair Powell speaking from Jackson Hole on Friday as well. So this is typically an event that the market is going to pay a lot of attention to. It's coming at the end of the week. I don't think anyone's going to show their hand aside from any kind of pre-positioning on Thursday based off that news before it happens. So it could be one of those weeks, COVID issues aside, where we don't see much, kind of a lot of consolidation, and then boom, end of the week, we see some really big fireworks. So just be prepared for that, especially for you guys in the UK who, 10 o'clock a.m. U.S. time, that's going to be 2 o'clock p.m. your time, a sneaky afternoon session coming up this Friday. But let's talk about the technicals and the charts, because that's what we worry about primarily, right? Fundamentals and news events are always secondary aside from knowing when to stay out. We're going to start here on the pound dollar on the daily, and pound dollar has come to an interesting level. Now, I'd love for this to spike a little bit lower. This has been a good example of what we saw this week. Price action coming to interesting levels, but not getting to where we need them to be within those levels or having underlapping levels of structure. But this is a primary level of structure support here and a perfect place for a counter trend trade opportunity. So to take advantage of the end of a bearish move, some relief, and a little bit of a pop back to the upside. And if we are going to pop up back up to the upside, I would expect a move back up to here. So looking at basically $1.36 up to a little bit above $1.37, 100 pip range here on the pound dollar. As you go down to the 4 hour, you're going to see a little bit of loss of momentum. Again, Friday afternoon, you're going to see that a lot more than throughout the week. But you can see we get a clearer view of that structure level. So again, looking for reversal opportunities in here, down around that 136 level, going back up towards that 137, 137.20 level. For you guys that are CTS traders, the combined technical score That's how we quantify our trading opportunities. So we assign them a point value and we can kind of rank them as being good or bad. And it's no longer emotional. It's based off of actual numeric figure. We've got an AB equals CD pattern right down there. Obviously, we've got major structure. We compare that with a Fibonacci extension, swing high to swing low and back down. 1618 right down there as well. RSI oversold. A good start to that CTS score if you're looking to build a case for entry. Next, we're going to go to the dollar yen. This one's a little bit early, but I like to get you these things with enough time to kind of look out for them. But we have two potential advanced pattern formations setting up here on the dollar yen. Now, I'm not going to worry about the smaller one as much because that's on the hourly. And again, we can, you can measure this out on your own right. X to A to B, B to C, C to D, a little bat pattern in there. But there's a bigger one as well, and it's going to be a potential Gartley pattern, right? So I'll show you real quick, kind of shortcut through this process, what it looks like. This initial swing high to swing low, X to A is going to be our X to A. This first retracement is going to be our A to B. This second retracement is going to be our B to C. And if we come up into this 127 Fibonacci extension, taken from the A to the B leg, that is going to complete our bearish Gartley pattern. And the zone from that completion point, that D point, to the starting point of our pattern, that X leg, that is going to be our potential reversal zone. So again, dollar yen in consolidation for a while now. We're starting to kind of what's the word I'm looking for? Contract a little bit with the range. Again, you can see the range getting smaller and smaller. This is where you notice a lot of advanced pattern formations where that price starts to kind of bunch up and retracements retrace small, extensions fail to extend. These are the opportunities where, these are the situations, I have to say, where you're going to see a lot of advanced patterns complete. And we've got two of them here on the dollar yen, one on the 4 hour and then that smaller one, that baby one, inside here on the hourly. Pound Aussie. This is going to be a follow-up from, I'm not sure if we looked at this last week, but we've been stalking this for the better part of a month right now, looking for a continuation trade really up to 94.50s, right? I think we looked at this back when we broke probably this structure high right here, looking at $1.90 because I had a video that said a 400 potential pip move and all that fun stuff. But this is still on the radar, so I don't want you guys to forget about it. And what we've recently done is this, right? We've put in a little bit of a consolidation pattern, right? Boom, we broke out of that pattern. Now, this is not the moment right here where I would look to buy, right? We're getting some bearish signals to end the week, long tail rejection to the upside, and an even bigger rejection pin bar to the upside as well. But we should be looking for this relief, anticipating that relief, and looking to catch the next move. So if we get a little bit of a breather and price action retraces back down into that consolidation area, that's a perfect place to fire off those longs and look for that extension. Again, up to that 194.50s area. So this has been something that has been on the radar. Again, we've spoken about it a few times over the last month on this Trading Edge video, and of course looked at it in the live room. I don't want you to forget about it, and remember that just because it's taken its time doesn't mean the opportunity is gone. That opportunity will come, but if you're not consistent in your analysis, if you're not consistent in your routine, if you're not checking it on a regular basis like you should, well, you run the risk of having that move happen without you. And again, the last thing you want to happen is have the market move 400 pips and you miss your entry, because these are going to be those trades that happen once a year, once every 2 years, and you need to take advantage of them. And if you're consistent, if you're in a routine, you're not going to miss it. If you're random and just treating your trading like a hobby instead of a business, you probably will, and you'll regret it, and that's going to be deserved. Next up is Pound Swiss. This is going to be a short one. I just want to talk about levels right here. And this is a good example of our IPDE process: identify, predict, decide, execute. You can see we ended the week. This was another one that came down to, and just to give you kind of an example of what we've been looking at all week, we've had price come down to structure, but we've had under and overlapping levels of structure, which essentially, for me at least, invalidate trading opportunities. So it's been kind of a that type of week, but having those rules keeps you out of losing trades. So this is, again, like I mentioned earlier, this is why you just don't want to rush into stuff for the purpose of being in a trade, because you're more likely going to lose money and have your profit sucked up than gain anything extra. At least in this case, you deal with some frustration where it's like, oh man, I couldn't enter a trade. but your account size isn't smaller. But anyway, going back to that IPDE process, identify, right? We ended the week with a break and close below our most recent level of structure. That allows us to make the prediction that price is likely to go lower. So the question we want to ask ourselves is, if price action is likely to go lower, then where are we likely to go lower to? You can see my notes already on the chart. First place that comes to my eyes is this little bit of retracement right there. This is why it's important to be able to read the ebbs and flows of price action and not skip over it. Started off this video talking about people that rush through the process. Well, unfortunately, we had that instance a few times this week. We started off this week with a trader asking a question. He said, Akil, I'm struggling with trend continuation trading. Can you shoot me some examples? And we kicked off our Monday private Q&A session, and we dug into the topic. We looked at some charts. The trader chimed in. And what we noticed was that the trader didn't know how to identify a trend. So one of the reasons he was struggling is because he was looking for bullish trend continuation trades in bearish markets, like obviously bearish markets. Now, I don't say that to poke fun at the trader, because that was my story. Again, I was a trend following trader that couldn't identify the trend. And it took someone saying, hey, what trend is or which way is the euro dollar trending, for me to realize it. Because I was like, I don't know. And it kind of hit me like, if I'm a trend trader, I should probably understand the trend. But it was the trader essentially admitted. He said, I said, how many courses have you gone through? He said, I'm at the mastery course, which is the course that we teach all the strategies and whatnot. And I said, did you go through the basics course? Did you go through foundation 1, foundation 2? This is where we just focus on pure technical analysis, reading price charts, reading candlesticks, all that fun stuff, simple patterns. And he said, yeah, I went through it. I said, did you do all the homework? He was like, I said, did you do the homework? Kind of skipped over that part. Like, what do you mean? How do you skip over that part? And we got to the point where he basically said, I've got experience in the market. And it's harder, I think, for people that have experience in the market, because it's easier to skip over the kind of the boring stuff, where if you're new, you're kind of like, oh, this is cool, a candlestick, wow. So he's like, I got experience in the market, and I just didn't think I needed it, right? I think I can go past it and get straight to the strategies. And we identified a major flaw. Now, thankfully, this trader was open to learning and admitting his mistake and out there getting help. Because imagine if we wouldn't have found this error, he would have lost a lot of live money in the market. But the point is, now he has to go back. He's got to redo the courses, redo the homework, go step by step through it to make sure he gets it. And that's just going to increase that learning curve. So now, instead of maybe a 6 to an 18-month process, maybe now it's a 9 to 20 month process. And again, time is everything for us. So you got to invest and take your time going through the stuff that matters, even if it seems boring. So I forgot how that rant started, but I think we're talking about, identifying ebbs and flows are going to be important, not just for trading opportunities, like identifying breaks of structure and making predictions, but also for identifying potential target levels. So this is the first level that comes to me, this previous new structure high. We could end up making this a zone if we want, depending on how aggressive you are in your target taking. But if we look left, you're going to see that's at a pretty decent level as well, especially that lower line where we look at where price action came before and found resistance, 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 resistance. Pretty decent level to look for targets. So as this trade plays out, we can do some more stuff here. Let's just kind of do it while I'm here. Let's measure out an AB equals CD, see if that gives us any type of clues. First time doing this. Look at that. Oh yeah. And let's put a Fibonacci extension out there, swing high to swing low, just like we did with the last pair or a few pairs ago. Oh yeah, baby. Look at that. So AB equals CD, 1618 Fibonacci retracement at that level. Now in the other case, I think it was the pound dollar where we started off at, we were looking at this level to build our case for entry for a CTS trader. So for a counter trend trader looking to take advantage of the end of a trend and the potential relief, this is where they're looking for. For a trend continuation trader who is looking to catch a potential continuation down to this level, this is where they're looking for. This is why we talk about, or this is why I say all the time, think like the other traders, right? Our tier 1 members are tired of me saying that. Think like the other trader, think like the other trader, think like the other trader. There's no such thing as trend continuation analysis or counter trend analysis or bullish analysis or bearish analysis If you learn how to analyze the market, you will become good at making projections. If you become good at making projections, then you can use them for whatever style of trading you may be, whether you're using it to project a target location, like in this case, or a trading opportunity, like in the pound dollar case, or for any counter trend traders in this case. So learn the basics, and then learn to trade after you've mastered the basics. Jeez, tired of answering these questions. So next we're going to pop out to the DAX, right? This is an index, and you can see again the most recent move. I'm on the weekly now just to get some perspective. Most recent move, new structure high, higher close, all-time highs, however you measure it, right? This little green candle right here. And then we got a very nice bearish candle to end the week. And what's nice about it is the wick, the rejection, right? Does this look familiar, anyone, right? Rejection, right? These little clues that candles leave us, if you know how to read a candlestick, could be very important. We go down to the daily and same thing, right? We got some tweezer bottoms down here where 2 days ago we had a push down and a rejection back up, and then to end the week today, a push down and a rejection back up. Now I still think it's super aggressive to enter just off this red candle. A little bit more conservative to enter off this green candle, still aggressive in my opinion. What would be a big sign for me would be a higher high, higher close. So for the bulls to prove that they can not only create new highs but hold it for the entirety of the session, that would be a very big clue in projecting further continuation to the upside. Dow Jones is going to be next. This is going to be very similar, but this is going to give us an example of that higher high, higher close, and this is also going to be that 3-bar reversal. So again, same thing, higher high, higher close, nice rejection to end the week. We go down to the daily, and again, you can see that high momentum bullet or bearish candle, right into a previous level of structure. And then that very nice rejection right here, showing us that the sellers tried to push down and the buyer said, no, not so fast, my friend. And then they followed it up with the sellers, right, pushing down again. How do we know that? Because we know that this wick came to the downside at one point. The close, or the current price, I should say, was down here. Yet we ended the day with the bulls rallying, right? Making up for all those losses, breaking and closing above that previous structure, or that previous candlestick, giving us a higher high, higher close, and in combination with the other two candles, a 3-bar reversal, which is a really good entry reason. So awesome opportunity here as well on the Dow Jones. See how this technical analysis is good no matter what market you're in? It's not just a Forex thing. You can use it in crypto, you can use it in commodities, you can use it in stocks. If you learn the skill of how to read a price chart, you can be dangerous in any market.